Good morning, friends. Today is the
morning.
second session for that our LODR session, and we were not able to complete. So today is another second session of that program. Our own Mr. Sudhakar is there with us. Mr. Sridhar was not available as he has some family commitment. So we have our new friend, Mr. Rajiv, with us today. So welcome, Sudhakar and Mr. Rajiv.
Thank you. Good morning to all.
Good morning.
Sudhakar is known to everyone and well, Mr. Rajiv, but formally I'm introducing. Mr. Sudhakar is a fellow member of ICAI and fellow member of ICSI, qualified Charter Secretary in Administration UK. He is working with Reliance Industries Limited since 2005 as Vice President Corporate Secretarial and has worked with Burger Pains for about 15 years. He is member of Secretarial Standard Board of ICAI and Vice Chairman of Expert Committee on Secretarial Standard of ICAI for 2021. He is regular faculty at IOD, guest faculty at NESM, K. Somaya Institute of Management, Mumbai. Welcome, Sudhakar.
Thank you very much.
Mr. Rajiv Gandhi is a qualified Company Secretary of India, Company Secretary having total experience of more than 27 years, including post-qualification experience of more than 25 years. Presently working as a Company Secretary and Compliance Officer with Ambuja Cement Limited since 2008. Previously worked with Birla Group, Ford Motors, Deepak Fertilizer Group. Major achievements: handled one of the complex merger amalgam deal of large size, cross-border merger amalgamation, SFIO and CCO investigation, IPO and borrowings, whistleblower policy implementation and investigation. Oh, fantastic. We will call you for that also then, Mr. Rajiv. Thank you. Welcome to the board of Mehta Mehta. So today's our LODR recent amendment. In amendment only we had 2 sessions. If we have LODR, then itself is a big thing. So second part we are taking. I'll not talk much on this, and I'll suggest faculty to say a few words on the topic. Over to Pen.
Yeah, good morning, everyone. In fact, last time, since I had given my introductory remarks, and also we have discussed the key amendments which have come, which are very, very important in respect of independent directors as well as the related party transactions. And the remaining portion we will discuss it today. And while we are progressing, whatever the comments I have to give it on the amendments, I will do that. Thank you.
Mr. Rajiv?
Yeah, thanks and good morning to all, and thanks for inviting me for this session. I believe there was an earlier session on the same topic with different aspects like related party and other things. And we'll be dealing with the board and the independent directors in this second session. One fundamental issues which I would also like to debate or ponder upon, and the panelists and even the participants, that too much of amendments changes are happening in LODR and in the Companies Act also. Maybe going into different directions and putting a lot of pressures on the organization, on the team also, on the professionals also. So we need to also somewhere debate or discuss that how do we try and align, and what role our institute can play in this, or our CS professionals. I'll just take 2 minutes on this, not more time. While we discussed all these topics in detail, I would like, maybe like our institute is doing so much things, and maybe so many representations or coordination with the Ministry of Corporate Affairs. I don't know whether the same amount or same level of coordination or the representation is being made with SEBI, so that the alignment of the rules can take place, and which makes the ultimate objective of the government also of doing the life. I mean, you can say the ease of doing business can be then implemented in its true letter and spirits. So these are my thoughts on this while we discuss and debate on these topics in detail. Thank you.
Yeah, Mr. Rajiv, I think you have put the said the words which is from the heart of each professional, and everyone is worried with this continuous amendment and getting pressurized for the compliance. Okay.
Before we go further, I have a small submission to both your organization as well as to all the
Sudhakar, can you raise your mic a little bit? We have to strain to hear you.
Okay. You're able to hear me now?
Still a little bit more if you can. Can you?
This is at the maximum I have.
Yeah. Barabar.
This is better than what it was earlier. Yes.
Okay. So what I'm trying to say is that, in fact, at SSB, we are working upon the revision of the guidance note on the related party transactions. So if you have any kind of contentious issues or ticklish issues where you require some kind of explanation, interpretations and all, which will help you. But you may write to me, or participants may write to Mehta and Dipti can send that same to me. And we will deliberate and address those issues in the revised guidance. Yesterday also in one of the forum where I was a speaker, I submitted the same submission I had given. So that what happens otherwise that 25 people who are there in the SSB, we only discuss and whatever the issues we come across only, we will work upon that. So I thought I will invite that also. Thank you.
Yeah, I will remind everyone in the next 1 or 2 session also, Sudhakar.
Sure. Very kind
Okay.
of. Thank you.
Thank you. Yeah, Charmi,
Yeah.
you can start the presentation. Charmi? Yeah, please start.
Went through the amendments which took place with respect to directors and related party
You are not audible, Charmi.
Charmi, your audio is not proper. No one can hear you. Can you make it louder, please?
Am I audible, ma'am?
Yeah, now audible. Please start.
Yeah, so good morning, every one of you present here. In the last session, we had discussed amendments with respect to related party transactions and amendments with respect to directors. In this session, we will be starting with the amendments pertaining to the committees. So on 1st Jan 2022, Regulation 18(1)B, composition of audit committee. Earlier, the old provision says the 2/3 of members of audit committee shall be independent directors in case of a listed entity. And the new provision says that at least now 2/3 of the members of audit committee shall be independent directors. So the now remark being, if the calculation of 2/3 is a fraction, then the same has to be rounded off to the forward greater number. Going to the regulation number 19, subregulation 1 clause C of independent directors in NRC, it stated that earlier provision stated at least 2/3 of the directors shall be independent directors in case of a listed entity. And now the new provision says that at least 50% of the directors shall be independent director. The impact being the strength of the independent directors have been decreased from 66% to 50%.
No, I think there is a mistake in that. It was vice versa. Earlier it was 50%, now it is 2/3.
Okay.
Because we have just changed. I'll give you an example of Ambuja NRC. Earlier we had 50% of independent directors. Because of this new provision, we had to increase the size of our NRC by inducting 2 more independent directors on NRC.
Okay,
So
sir.
just check. I think it's you interchange this.
Yeah, that is correct. In fact, it is early now at present it should be at least 2/3 of the directors shall be independent.
Instead of increase, you are reduced, Charmi. Okay, we have to increase it from 50 to 66%.
Yeah.
No, it's just an interchange.
Yeah. No, it's a big thing. Yeah, Charmi. Sorry, apologize. Thanks.
Sorry. Coming to Regulation 21, Subregulation 2, composition of Risk Management Committee. The majority of the members of Risk Management Committee shall consist of members of Board of Directors, and in case of a listed entity having outstanding SR equity shares, at least 2/3 of the Risk Management Committee shall comprise of independent directors. The now new provision says that the risk management committee shall have minimum 3 members, with majority of them being the members of the board of directors. So, so the impact being that minimum number of members has been prescribed here earlier, which wasn't mentioned in the regulation. Coming to regulation 21(3) sub-regulation.
Can I say something to the previous?
Yes, sir.
See, there is slightly, the way they draft, it's minimum 3 members, with majority of them being the members of the board of directors. That means you can have the outsiders also. I mean, the non-members of the board of directors.
No, it is not. Actually, see that, Rajiv, if I am not wrong, risk management committee is the only committee where you can have the senior executives of the company as members of the risk management committee.
Yeah,
So
right.
if I am having 3-member committee, I can have 1 executive and 2 directors. Out of the 2 directors, 1 should be independent. This is what it means. Earlier, what they did was they have not prescribed the minimum number of the size of the committee, I can say. They simply said that majority to be directors. And and the senior management can be the members of risk management committee. That was the earlier regulation.
Sir, any rationale? I mean, do you think why or in this particular committee they
One rationale I can feel is that it is rightly so. As far as the risk management committee is concerned, the suppose if I am putting all the independent directors there, they may not be knowing the risks which are inherent in the organization. Okay, so suppose, for example, in our case, my CFO is the member of the risk management committee, and one of the executive directors is the member of the risk management. Of course, anyway, that he is a director, that is a different thing. And one more technical person, because ours is actually, that refinery, which is having a different ballgame altogether as far as safety and other things are concerned. So like that, they might have given. So that is the only rationale which comes to my mind. In one way, it is good.
I feel in risk management committee, I think there should be, this is my opinion, you can correct. From each department, risk management, there should be the member from the company executives. Because risk management, when you say it's from each department, there will be risk. How you minimize that?
But then that would be too big a committee.
Normally, Dipti, what organizations do have is that you have subcommittees, that is called as executive committees.
Yeah.
Okay. So every department virtually you have that executive committees. In the executive committees, then it will go percolated upwards. So those executive committee, that whatever the discussions, everything is there. Sometimes what happens is that we also place the minutes of the executive committee before the board committee. That's how the board committee will come to know. So at the same point of time, the board committee is within its prerogative to invite the executives of respective departments and to explain the risks which are inherent to their respective departments and how they are planning to mitigate those risks. That's how it goes normally.
Okay.
Yeah.
Okay. Thanks. Yeah, Charmi, next.
Yes, ma'am. Moving forward, the risk management committee it was earlier mentioned that it shall meet once in a year. Now the new provision states that it shall meet twice a year. So the minimum number of meetings has been increased to 2 from 1. Coming to regulation 21 sub-regulation 3B, it states that quorum of RMC meetings and gap between 2 meetings. Earlier, there was no provision in LODR provisions, now which has been added that the quorum for risk management committee shall be either 2 or 1/3 members of the committee, whichever is higher, including at least 1 members of the board of directors in attendance. And the gap between the 2 meetings shall not be greater than 180 days. So here the remark being the quorum has been prescribed and the gap between 2 meetings shall not exceed 180 days.
Can I speak to Sudhakar? Sudhakar,
Yeah.
This concept of a management person being on board the risk management committee, I think is something new. I wonder whether we have covered that in our secretarial standard, the possibility of a non-member being a member of the risk management, non-board member being a member of the risk management committee.
No, sir, that it was not required because in SS1, if you see what we said was, SS1 is applicable to only board meetings as well as the meetings of the statutory committees.
Yes.
Statutory committees means which are committees constituted under the Companies Act,
Correct.
not under the listing regulations.
Okay.
Risk management committee is constituted under the listing regulations and not under the Companies Act.
All right. So SS1 does not require fresh attention.
No, sir, no.
No. Okay.
Sir, but may I say something? Now, these committees like risk management or maybe other committees are also basically coming from the regulations, like of course not from the Companies Act, but from the listing regulations.
Correct.
So in a way, it is having a kind of a statutory, status.
But when framing those regular guidelines, the standards, we have clearly said that this covers only Companies Act, because otherwise you're opening a Pandora's box.
Yeah. Because what happens is, of course, Raja sir, you know it very well because you were the SSP member at that point of time.
Yes.
Just for the benefit of the participants, and is that SS1 primarily covers only the provisions of Companies Act, not of the listing regulations, because it
Correct.
requires an approval of Ministry of Corporate Affairs.
Correct.
Whereas guidance note on SS1 is concerned, that is within the prerogative of the Institute of Company Secretaries. So we covered all the listing regulations pertaining issues as far as the meetings of committees and board is concerned. Very elaborately and comprehensively we have covered in the guidance note of SS1. In fact, you might be knowing that the guidance note on SS1 we have revised on 31st December 2021. It was released also, because though we have submitted the revised standards to the ministry, they are yet to give their approval. So SS1 last amended was on 1st October 17, which was released in the revised SS1. After that, a lot of changes have come, but those changes have been incorporated, given to the ministry long before, but ministry is taking their own time in giving their approval. So what we thought is, in the meantime, why can't we update the guidance note so that it will be beneficial to the members, which we have done. Up to 31st December, whatever the amendments have come pertaining to the board and committee meetings, we have revised that in that revised guidance.
Excellent. Thank you, Sudhakar.
Okay, sir.
There is a question, Sudhakar. Is it correct to say that SS1 does not apply to risk committee and the company may follow it as a good governance?
Yes. But as I told, in fact, that several forums, Dipti, you and me also, we have addressed that SS1 strictly, though it is not applicable to the independent directors meeting and other meetings other than your what are covered, like your CSR, NRC, SRC, and these are the only 4 committees which are covered. But it is advisable always governance point of view, and in fact, for convenience and standardization point of view also, you comply with the SS1 provisions, even for a risk management committee as well as your independent directors meeting also. We do comply in our organization.
I will put Sudhakar. It's a risk minimization effort by Secretarial Department for their own benefit.
Absolutely.
I will say risk committee, when you are taking risk assessment of Secretarial Department, we have tried to mitigate that maximum through SS1 and guidance note.
Correct. Very well said.
Okay, Charmi, go ahead.
Also, responsibilities of risk management committee has been provided by the amendment in May. So it says that the roles and responsibilities of the risk management committee shall mandatorily include the performances of functions which are specified in the Part D of Schedule 2, which includes the functioning of the board and mitigating risks as well. Coming to the applicability of risk management committee, in the earlier provision, it said that it was applicable to top 1,000 listed entities, but even now they have included high value debt listed entities. So the high value debt listed entities also come under this provision now. So high value debt listed entity is an entity which has listed its non-convertible securities amounting to rupees 500 crore or more. So as soon as the company crosses this limit, it falls under the category of risk management committee and it has to establish one.
In fact, to say only one thing as far as RMC is concerned is, earlier though it was made mandatory for listed companies to have a risk management committee, as far as the structure is concerned, it was virtually left to the company. How to structure, what are the terms of reference, everything, and it was left to the company only. Now, like other companies, they have given the structured provisions as far as the risk management committee is concerned. According to me, it is a welcome feature. They have very well covered everything.
I was supposed to ask the same thing, the panel, that what is your view when they are structuring and bringing more importance to risk management? And I think more and more, this is a starting, I feel that there will be more additions and amendments in risk management.
In fact, let me say that though, as per the listing regulations, you require 2 meetings minimum and gap should not be more than 180 days. But take my word, very soon it is going to be at least once in a quarter, if not more.
I was supposed to tell at the time of 2, but I kept quiet. Yes, it will be. I fully agree.
See, because the audit committee, the way the kind of responsibilities which have been entrusted upon it, the 4 meetings are not sufficient according to me. So audit committee should have minimum 6 meetings, because 4 meetings anyway, that that 4 financial results they have to discuss. Where is the time for them for other things? So at least 2 more meetings are required, and according to me, in a near future, we may have a kind of an amendment, maybe 6 meetings for audit committee and 4 meetings for risk management committee.
Yeah.
You're
Yes,
absolutely
agree.
right, Mr. Sudhakar. In
Yes.
fact,
Mr. Bala, welcome. We were missing you.
no, I did not notice the timing. You advanced by half an hour early.
Wow.
Because I thought it is 11.
See,
But is-
Sudhakar, now the people are joining. I said, no, everyone is with that 11 o'clock.
Because it was actually.
Sir,
11.
I am the culprit for this kind of a mess up today.
I see.
I am the culprit because I requested for a kind of a preponement by half an hour or
I
so.
did not notice that, because all along yesterday also when we were discussing, I said 11 o'clock. So I was under that impression. I just logged it about 5 minutes before 11. Then I saw the meeting is already on. Then I saw the message it is 10:30. Anyway, coming to the point what you raised, in fact, I have been associated with one of the MNC group of companies, spent almost about 30 years of that time with a UK collaborated company. As you rightly said, in that company, irrespective of whatever the LODR calls for it or not calls for it, they have actually governed by their parent company regulation, where in UK there is a Turnbull committee, which has been actually stressed upon the risk management. In fact, it forms of the risk management report itself has to be form of the annual financial statements there. So based on that, in the company where I was working, we used to have every quarterly meeting. In fact, our audit committee meeting used to be one day earlier than the board meeting. The board meeting used to be the next day. That used to be the case. In addition to that, the audit committee also used to meet separately, other timing than the quarterly results, which are actually being considered independently to analyze the risk. In that, what they used to organize one full day meeting of the audit committee. In that particular meeting, they used to call almost all the external people, like the statutory auditor, cost auditor, external consultant, the people who are dealing with the various matters, legal matters, etc. They used to call everybody, because the audit committee's chairman was of the opinion that he would like to hear what you call the horse's mouth, what is actually happening rather than what is presented by the company. And then they also used to have the risk register, which is updated on the ongoing basis, rating the risk. What is the rating the risk? Where the risk is very high, we need to address. What is the risk which is actually medium category, where we need to take the step, where we can live without the risk, where it is a minor risk, like that they used to do it. They were doing a fantastic job of risk management actually in that committee. The regulations, whatever is coming today, as you rightly said it, I actually foresee such feature is going to come in the near future. It is only the question of time. It is going to come. Definitely having the risk management is going to be one of the very important aspects for the corporate world. It is going to happen. That I can definitely foresee.
I want to add what you said is, sir, like this. As company secretaries and the key managerial persons, or if you are in practice as your, under practicing company secretaries, you have to advise your clients that don't confine yourself to the regulations or the statutory provisions. Ultimately, end of the day, you are the person who has to face the music. The way that the legal things are changing, you have to see that a proactive approach, you have to adopt it. Educate your directors and also ensure, apart from compliances, not only in word, but sometimes by spirit. One may say that it is very easy to say and very difficult to implement it. But unless until we have that attitude, we have that intention, we will never be able to approach it. We should not do a tick box exercise. Then only we will be safe tomorrow.
Mr. Rajiv, your view on the topic?
Absolutely, and as the other panelists rightly said, because of the complex nature of business, this risk management committee is also very vital, and in times to come, it's going to gain more and more prominence and importance. If I have to share my experience, we have a very structured risk management committee headed by the independent director. We have quite exhaustive charter of the risk management committee, and obviously, since we are also coming from the multinational parent background, that is also very much required in our systems and processes. But we have a dedicated team of the people who are handling this aspect, and they are coordinating with all the departments or functions, and then collating the information, presenting. And our meetings are also quite exhaustive. It runs for 2 hours, 3 hours, and very detailed discussion takes place on this. So as Sudhakarji and Balaji has rightly mentioned, the frequency of the meeting should be increased to 4 meetings, obviously, because that's the need of the hour, and more focus should be done so that the burden on the audit committee can be reduced, to some extent, because as of now, I am seeing everything is put on audit committee. Everything is put on audit committee. So somewhere then the audit committee is burdened too much, and maybe the main focus of the internal controls or systems, you can say, sometimes it gets diluted.
Right. So I will say that composition, we can mitigate risk by proper composition number and reference to risk committee. And that way overall risk can be reduced if we have that strengthened risk committee and it's working. Okay, Charmi, next.
Yeah, so the powers of risk management committee have also been mentioned in this amendment. It states that the risk management committee shall have powers to seek information from any of the employee or obtain any outside information or any other legal professional advice to secure the attendance of the outsiders with relevant expertise if it considers necessary. So the powers of the risk management committee have been widened. Now we will be discussing the amendments with respect to other regulations, which includes Regulation 3 and Regulation 3, Subregulation 2 and 3, which states about the applicability of the regulations. The new provision states that the provisions of this regulation, which become applicable to listed entities on the basis of market capitalization, shall continue to apply to such entities even if they fall below the threshold limit. So the provision of these regulations which become applicable on the basis of the criterion, it shall continue to apply to such entities even if they fall below the threshold limits as mentioned. So if any regulation is applicable to a listed company based on market capitalization, it shall continue to apply to them even if the market capitalization falls below the threshold limit. Now, Regulation 7, Subregulation.
CSR, what we have, that similar concept they have applied here also. CSR company, Yeah.
In case of CSR, there is a time period is there for 3 consecutive years like that, but which is not there here. Because once you got triggered, then you have to comply with for the years to come.
Yeah, continue.
Regulation 7, Subregulation 3 talks about certificate from registrar and transfer agent regarding the share transfer activities. So here earlier the provision had stated the listed entity shall submit a compliance certificate to the exchange, which shall be signed by both the compliance officer of the listed entity and the authorized representative of the share transfer agent wherever applicable within 1 month of the end of each of half year and of the financial year. Now it states that it should be submitted within 30 days from the end of financial year. So certificate has to be filed within 30 days from the end of financial year instead of 1 month of each half financial year.
So that means only one certificate is to be submitted instead of two earlier.
Yes, sir.
Correct.
Coming to regulation 22, subregulation 1, vigil mechanism and whistleblower policy. It states that the old provision stated that the listed company shall formulate a vigil mechanism for directors and employees to report genuine concerns, while now the new provision states that the listed entity shall formulate a vigil mechanism or a whistleblower policy for directors. So listed company shall now formulate either a vigil mechanism or a whistleblower policy. Coming to regulation 24A, secretarial audit and secretarial compliance report, it states that every listed company shall submit a secretarial compliance report in form as specified to stock exchanges within 60 days from the end of the financial year. So secretarial report of unlisted subsidiaries need to be annexed to the annual report of the listed entity along with the annual report of respective material unlisted subsidiaries. Regulation 25.
I apologize. I have a question. What would be a fundamental difference between vigil mechanism and a whistleblower policy? Why is there an option available?
Sorry, your audio is not.
Is it better, ma'am?
Yeah.
Yeah, I have a question. Why is there an option for vigil mechanism or a whistleblower policy? Aren't they same?
See that if I'm permitted to answer this question, it is nothing but whistleblower policy is a macro level thing. Okay, by what are the responsibilities of that whistleblower committee and who can blow the whistle, how it will be done, how you will protect the whistleblower, all those things at a macro level will be coming there in the whistleblower policy. As far as the whistle mechanism is concerned, okay, that you have to go into the micro level, how you are going to handle the complaints and what is the procedure for that. That is how it goes normally. It is not optional actually. See, more or less, though they have used the word what's called as vigil mechanism / whistleblower policy, but both are to be there according.
Understood, sir.
Yeah.
Mr. Rajiv, your view?
I agree because vigil mechanism and whistleblower policy is basically nothing but one and the same. It's macro and micro. Ultimately, if you cannot, you have to have both vigil mechanism, which is a broad, and policy. I mean, policy which will act as a guidance, and the mechanism which goes up to the micro level of handling the any incidents of the whistleblower or the committee if there is any how it functions, what is the role of the audit committee, and all these things. So both are almost one and the same or goes parallel.
No, therefore this drafting is pretty wrong. That slash should not be there. It should be either and. The word should be
Sir,
and.
there are so many cases where the drafting is like this. We have to interpret and we have to put it in practice in its letter and spirit.
Okay, go ahead. Yeah, Charmi.
Yes, ma'am. So coming to regulation 25, subregulation 10, which talks about directors and officers insurance. Earlier, the old provision stated that it should be applicable to top 500 listed entities, which now states that with effect from Jan 2022, the top 1,000 listed entities by market capitalization calculated as on 31st March of the preceding financial year shall undertake directors and officers insurance for all their independent directors. So the remark being now it has been applicable to top 1,000 listed entities.
In fact, I want to add here one thing that again the same thing. My advice and submission to all the participants who might be in practice or in service, please advise your management or your clients to go for D&O insurance policy for every company, whether independent directors are there or not there, because definitely the professionals are there. The way these regulations are getting tightened every day, and the regulators are competing with each other in enforcing the penal provisions. So it is always advisable to have the D&O insurance policy because we have our car insured. We have a medical insurance policy. How about your work hazards? This also actually as a responsible, whether it is a key managerial person or a secretarial auditor, better to have this kind of insurance policy so that in case of a rainy day, this will take care of you.
I fully agree with Sudhakar sir. As far as we are concerned, like Ambuja ACC, we have the D&O policy which is applicable up to the middle level management cadre, basically.
And
So
let
from
me
the board,
further add one more thing also. The moment you are, suppose you have a group of companies, you have maybe having one listed company and say 50 subsidiary companies. When you cover more number of people, the premium will always come down. If you are having only one company you are covering and a few, suppose 10, 12 people and all, obviously that amount may be small and premium may be high. In our organization, each and every company, whether it is subsidiary, associate, holding, or parent company, whatever it is, all the directors and the senior management are covered in the D&O insurance policy. We have taken an umbrella policy which percolates down to every company.
I agree with you 100% with you, Mr. Sudhakar, because my experience also the same. Because I am actually, today 74. I am referring back about 30 years back. 30 years back, when the company where I was working, the company was operating almost about 32 different countries. The group policy of the company is at all the companies up to the senior management level, not only the director and the company secretaries and KMPs, what we are talking today, even the senior management levels, this is required. They have enforced it even 30 years back. According to me, as you rightly say, it should be across, irrespective of whether it's a demand by the regulation or not by the regulation, it is the need of the hour. It should be there, rightly you pointed out.
Thank you, sir. Thank you.
Yeah, Charmi.
And one more thing I wanted to add at this stage, we talked about, I think I missed it, that the vigil mechanism and the whistleblower policy, what you are talking about. See, vigil mechanism is the one which is set out the policy. How do we actually go about it? Once we receive the, whistleblowing is received, how the victimization is not taking place against the employees, etc. In fact, it is one and the same, the slash, whatever it is whatever you call it, drafting mistake, error, etc. I think we need to ignore that. We need to appreciate the spirit of the law. Because really speaking, the company where I was also working, the whistleblowing mechanism was there. What they have done is they have given a separate dedicated line to them. So that what happens is that anybody who wants to blow the whistle, whether inside or outside, whatever it is, they can use the dedicated number which is allotted to them. So that what happens, the identity of the person is actually not known to the people who are sent, unless until the person wants to reveal the identity. And then what happened, everything is actually kept in secret. They will actually go into the details, they will analyze, they will take necessary action. That is the way it was working. It is only the mechanism by which you want to operate the whistleblower, whether to disclose, not to disclose, at what level, what is the thing, that is what it is calling the whistleblower. Whereas the vigil mechanism is the policy which is as such, the company has to decide how to go about it. That's what I think. It is not different. It has to be one and the same. And the company need to have both put together in place.
Okay, thank you. Charmi?
Yes, ma'am. Coming to quarterly compliance report on corporate governance. Earlier, it was stated that the corporate governance report shall be submitted to the stock exchange within 15 days from the close of the quarter. But now the new provision states that it should be submitted within 21 days from the end of each quarter. So the due date for filing corporate governance report has been extended to 21 days from 15 days. Regulation 29, subregulation 1 clause F speaks about declaration of bonus securities. Earlier, this provision was mentioned, which has now been omitted. So from now on, intimation needs to be given at least 2 days before the board meeting where the proposal of bonus issue is to be considered. Regulation 31A, subregulation 3 talks about conditions for reclassification of any person as promoter or public. So earlier the provision had stated that reclassification of a status of a promoter or person belonging to a promoter group shall be permitted by the stock exchanges only upon the satisfaction of following conditions. And the conditions have been amended now, which states that an application for reclassification shall be made by the listed entity to the stock exchange within 30 days from the date of approval by shareholders in the general meeting. after ensuring that the following requirements have been fulfilled, which states that the promoter seeking reclassification has made a request for reclassification along with the rationale for the same and a description as to how the conditions specified for subregulation 3 are satisfied. Also, that the board of directors of the listed entity has analyzed such request in the immediately next board meeting or within 3 months from the date of receipt of the request from the promoter, whichever is earlier. And the time gap shall be of at least 1 month, but not exceeding 3 months between the dates of board meeting and shareholders meeting, considering the request of the promoter seeking reclassification. Also, a proviso has been amended here, which states that this subclause shall not be applicable in cases where a promoter is seeking reclassification and persons relating to promoter seeking reclassification together do not hold more than 1% of total voting rights in the listed entity, and where reclassification is pursuant to a divorce. Regulation 31A, subregulation 10 speaks about exemption from the conditions for reclassification. Earlier, there was no such exemptions provided, which is now amendment by the LODR regulation, and it states that in case of reclassification pursuant to an open offer or a scheme of arrangement, the provision of clause A of subregulation 3 and clause A and B of subregulation 8 shall not apply if the intent of the erstwhile promoter to reclassify has been disclosed in the letter of offer or scheme of arrangement, provided this regulation shall not apply in case of reclassification pursuant to an open offer. Coming to regulation 32, subregulation 7, report of a monitoring agency. Earlier, the listed entity who had appointed a monitoring agency to monitor the utilization of the proceeds of a public or right issue, the monitoring agency report shall be placed before the audit committee on annual basis, which is now amendment, and it has been said that it should be placed before the audit committee on a quarterly basis promptly upon its receipt.
Charmi, may I ask a question on reclassification?
Yes, sir.
Yeah,
Go ahead.
hello.
Yeah, sorry, am I audible?
Yeah.
Yeah, very much.
Yeah, ma'am, I had a question about reclassification exemption, which is 1% or below. In that case, what is the appropriate procedure that could be followed? Because if section or the provision of 37 is not applicable, then what is it that should be adopted to give effect to taking names of promoter group holding less than 1% out of the shareholding pact?
Handle, please.
What is the question like?
Question is, since the provision is not applicable for that reclassification for 1%, then what exactly the procedure is to be followed for that return, where the consolidated holding is less than 1% in promoters?
No, even now I am not clear on the question. See, only thing is that regulation 31A talks about the reclassification of promoters. If a person is in the promoter or promoter group and if they want to come out for any reason, there is an elaborative procedure has been prescribed, which was not there earlier. Earlier, what used to happen was if somebody who is a promoter, if he has to come out of the promoter, this thing, there was no procedure prescribed. So what used to happen was when you are filing the shareholding pattern, you just change that promoter from the promoter to the public and all, and similar same is the case with the annual return also. And whenever you are having any kind of offer document for issue of securities, you used to do like that. That was the only procedure available earlier. But now what happened is that when the listing regulations 2015 were notified, that point of time, they brought a kind of procedure for reclassification of promoters means where the promoters are there. Say, for example, if the promoters' children are there, the daughters got married, they went out of the family, but they might be having some shares. They don't want to get classified as promoters. Or sometimes it may so happen the promoters' shareholding was virtually reduced. They may be having at one point of time, say 25% plus or 20% plus, and over a period of time, it so happened it was come down. But still they're grappling with the obligations of the promoters. In fact, one of the reasons why recently SEBI has come with a what's called as one consultation paper, they are now actually contemplating to do away with the concept of the promoter. They are bringing the concept of controlling interest. Okay, that because there are people who are having controlling shareholding, but they are not classified as promoters. In fact, in case of related party transactions, when they have amended this regulation 23,
Right.
that is one of the reasons when they have amended the related party definition, that there are some FIIs who are having, say, for example, 10% or 20% more than that shareholding, but they are not promoters. They are not related parties. So they brought them under the net of the related parties. And very soon we are going to have this promoter concept to do away with and to bring the that what's called as controlling interest concept. I'm sure that you all might have gone through that concept paper, and according to me, it was a welcome feature, because there is no point of a promoter having 5%, 7% shareholding, and he is grappling with all kind of restrictions and obligations on him, accountabilities and responsibilities. That's how I go. That's what my answer to that.
Yeah, and there is also a question about divorce. The same way like what Sudhakar mentioned.
Divorce is the same thing. Suppose, for example, if there are two promoters, husband and wife are the promoters, and they got divorced, and the wife or husband wants to get out of the promoters. Say, for example, the wife might be inherited, and husband don't want to continue because he don't want to say, "If you do your business, I will do my business." That may not be the promoter in your companies, and vice versa. So there is a procedure available for that also.
So there is one.
Yeah. Does it, have you got the clarification what you needed?
Yeah, sir.
Yeah, thank you.
There is a question from Ria. What if the promoter group, which is a body corporate, wants to reclassify itself, which alone holds more than 16%, but they have internal dispute? How this body corporate wants to reclassify itself?
See, whether it is a body corporate or individual, the rule is the same. There is a very elaborate procedure is there, and if you want to get out of the promoter, what's called as the definition or the concept, there is you have to get, first of all, qualify for that. And once you are qualified, you have to submit your request to the board, and the board will examine that. Then the board will put up to the shareholders. They have to approve that. It is not automatic. But at the same point of time, it is not forever you have to be a promoter. Once a promoter is forever a promoter, that concept is also not there now. But there is a very elaborate procedure is there. In fact, initially when SEBI listing regulations have come, everybody was happy, right? Now we can easily get out of the promoter thing. But
Right.
very few people who have complied with this procedure and came out of that promoter concept, it is not very lucrative. What's called as regulation to comply with and then get out of that. It is not that simple. Very elaborate procedure is there here.
Okay. Thanks. Charmi, next.
In fact, whenever anybody wants to go under this regulation, they may consult Dipti, Mehta and Mehta. They are there to advise.
In fact, Sudhakar, as you rightly said, the SEBI circular, if you actually go through it, it actually talks about the various preconditions for the reclassification.
Yes.
First of all, one has to go through the precondition. They have to ensure whether they are fulfilling the preconditions, and accordingly take to go through the procedure. That is the starting point where it has to be done. That is right.
In fact, you see that I remember this regulation 31 because when listing regulations came, along with BSc, and ICSI, they have done about 16, 17 programs, and I got an opportunity to go for about 10 programs out of all the things. Yeah. I went across the country, length and breadth. Lot of time, this question used to come on 31 only. So I used to say that, look, in the seminars and conferences, you cannot explain the procedure. In the seminars and conferences, you can only say when there is a kind of interpretational issues are there. Correct. If you want to understand the entire procedure, one has to sit across the table and then do it. The same is the case here also, okay, that according to me, in regulation 31, there is a little scope for interpretation. It is a procedural part. You have to have a tick box exercise. Just do it. If you are qualified, go on, get the approvals and get out of that.
Not only that, in this reclassification, if my understanding, correct me if I'm wrong, if I actually go through whatever the papers are available, it is not just automatically it will happen in an overnight or it will happen in a week's time or something like that. Really speaking, if you want to do the reclassification, the time involved will be ranging anything between from 3 months to 6 months. Really speaking, going through the reclassification, seeing the prerequisites are fulfilled, submitting the document to the board. Board is not going to wait just because you are submitting the document. Board also will meet periodically at once in a quarter, etc. Unless until emergency arises. Then the board of directors will analyze, they will go through. Once they are satisfied, then they will actually put up to the shareholders. Then the shareholders' approval will have to be obtained. Then only the reclassification will take place. It is not the procedure, just it is going to get completed in a few days' time or something like that. It is definitely going to take a minimum 3 months to 6 months time. That's what it appears to be by looking to the document which is actually now come out.
And if I'm not wrong, actually, pardon me that I'm not hands-on on regulation 31. But if I am not wrong, after the shareholders approval also, it is to be cleared by the regulator also.
Correct. You're right. Absolutely, you're right.
And regulator is very sensitive as far as the promoter is concerned. So getting all these approvals, it is not a children play. It is a time-consuming exercise, and it is a project kind of thing.
That is what I said, 3 to 6 months. Maybe it may take a longer time also. I do not know. But my judgment says like that.
Correct. I agree with you, sir.
Right. Charmi.
Yeah, coming to regulation 34, subregulation 2 clause F, business responsibility statement. Earlier, the provision had stated that the top 1,000 listed entities based on market capitalization shall submit a business responsibility report, whereas now a proviso has been added which states that the requirement of submitting a business responsibility report shall be discontinued after financial year 2021-22, and thereafter with effect from the financial year 2022 and 2023, the top 1,000 listed entities based on market capitalization shall submit a business responsibility and sustainability report in the format as specified by the board from time to time. So here the impact being from the financial year 22-23, business responsibility report shall be prepared in the format which is provided by the SEBI, and listed entities to whom the business responsibility report does not apply, they can voluntarily report the same, provided that even during the financial year 21-22, the top 1,000 listed entities may voluntarily submit a business responsibility and sustainability report in place of a mandatory business responsibility report. So provided further that the remaining listed entities, including the entities which have listed their securities on SME exchange, may voluntarily submit such reports.
In fact, the way the concept of ESG is getting developed, I'm sure that very soon, even that SEBI comes with that all the listed companies, at least the top 1,000 listed companies, they have to constitute a ESG committee mandatorily.
Right.
And come with the terms of reference, everything. There is no wonder in that.
Sudhakar, I have one question as regards this, and I was talking with several other friends. Now, we are giving so many information in annual report. This all is necessary. But at all level, it is necessary, whether all shareholders are of that level to understand and all that. Don't you think that at a click, everything is making public? So it should be it should be prepared and submitted to government and should be provided on the request rather than everything to be given to everyone, because then the concentration to read and time to require, people don't read only many things.
No, see, it is like this, the most of the information, what you are disseminating from time to time to the stock exchanges and to the public through the stock exchanges is a different one. But annually, once you are disseminating the information pertaining to the company through your annual report. Now, several times people say that annual reports are becoming bulkier and all, because every shareholder need not read every page of every annual report. Okay. So mostly that is for the, not only for a small shareholder, it is for the regulators, it is for the bankers, it is for the investors, it is for the FIS. So many people are there. And the annual report, similarly, say, for example, this proxy advisory forms, for them to read it thoroughly, they do need information. In fact, they are complaining that the complete information is not still being disseminated, despite the fact you are having a 500-page annual report. But still they say that that focus is not coming and all those things. So what I'm trying to say is, like a small shareholder like you and me, we cannot read each and every annual report. What you read, if you are a company secretary, I mean, everyone read the annual report, his own interest. If I am a company secretary, I will see that notice, I will see the CG report, I may see some kind of the secretarial audit report if it is a mandatory to that. So like that, whatever is interest to me, I will go through that only. Suppose if I am a ESG person, then obviously I will read the CSR report more. That's how it goes, Dipti.
That exactly I'm telling, that entire complete report should be for government, institutional investors and proxy advisory firm, that kind of thing. Like others, which is number is bigger, then this kind of huge report should not be there. There should be something whereby, of course, it is available on demand. It is on the website. Anyone can go and click and take a link.
So
You have the abridged annual report concept is there in the act. But what happens is that you have to prepare 2 annual reports. You have to publish 2 annual reports.
2 reports.
And so this is all kind of a very cumbersome exercise. So that's why what they do is by every company go for the full annual report only. Nobody is going in the abridged annual report these days. But the concept is there. The regulator has provided that.
Average, right.
I remember, Dipti, what you are saying. In the olden days, people don't want to disclose the salary details. So they always used to say this, the salary details is part of the report. If anybody is interested, they can write to the company. We will be providing it upon request. Some sort of a thing used to come actually earlier. I think you are referring those sort of the thing. That means as Sudhakar rightly said it, then again, 2 sets of documents is required to be prepared. One is the abridged report, you know to select whom you know to send. One is the elaborate report, then you know to send 2 mailing lists to 2 sort of the reports. These sort of the things need to be prepared in such a case.
Okay, there is a question. What are your thoughts on new format of BRR considering a very detailed coverage? Panel, please.
There are no thoughts, that whenever there is a format prescribed by the regulator,
whether you like it or not, he will comply with it.
He will prescribe for the information what they require, because they are maintaining a data bank of all these things, number 1. Number 2, also it is the responsibility of the companies to furnish that information, because at a governance level, every ministry and all, they have to work upon, so they require the information. So that's why this business responsibility report, which was there, now it has transformed into a business responsibility and sustainability report, BRSR. I think this is actually, you are also, because the economy is open now, it is a global economy and we are hooked to that. Worldwide, it is sustainability concept is developing day by day. That's what I said, that very soon SEBI may even mandate that you have to have a ESG committee. And in the coming years, the concept of ESG is going to, just like our corporate governance, still recently, of course, even now also it is there, corporate governance is a big hype. But in the coming years, it may get replaced by ESG. That's what my gut feel is. And as company secretaries, we should develop a taste for that. In fact, including me, we don't have a taste for ESG, but we have to develop that taste. It is high time for us, and especially youngsters.
It is going to be a big thing like a CSR and ESG. It is.
And in fact, this practicing secretary, practicing forms, you have to develop a niche for yourself for CSR audit, which are going to come, the impact assessment,
social
CSR audit,
impact or analysis, social audit.
Correct.
Everything.
In fact, in the new report, what they have done is companies actually formulating the various principles. The one disclosure, which is the additional disclosure, what they have incorporated in this is actually the principle-wise performance. That is what they are actually seeking the new BSR policy. What is the principle you actually formulated? What is the performance against that? What you have done? That is what it is actually asked a principle-wise. There are, I think, almost about 9 principles. Each of the principles, you have to talk about the performance of the company in this report. That is the way it has come, apart from giving the others detail like disclosure, financial information, etc., which is one of the things which is added in this report.
Mr. Rajiv, your view, please.
I fully agree that going forward, ESG is going to take the center stage than the just merely a governance, and more disclosures are going to be there. So we have to also develop our skills accordingly and not restricted only to mere the compliance. And this BRR, yes, new format has come. I have not yet studied it in detail, but there is no option but to gear up and upgrade our skills on this.
But one thing is going to be there, Mr. Rajiv, what you are saying, there are going to be challenges because some company wants to make some restrictive disclosures. How do we go about it? Suppose company has got certain sector specific things. How do we actually go about it? Then again, the comparability issue will come up because this is being the first time, the comparability issue that also will actually come. So all the things will actually come up here. And second thing is the company wants to make some voluntary disclosures other than the mandatory disclosures. Would they like to make voluntary disclosures themselves, or they want to go only by mandatory disclosures, leave it like that? All those things will actually come up. Once a first report comes, only we'll be able to see these things. It is going to be definitely a challenge when the report comes.
Sir, fully agree. Even I would say the mindset of the management and the board is also equally important. That whether they just want to stick to only the mandatory disclosure or they want to go
Correct. Absolutely, because you see, many of the management, they would like to go as far as possible what is really mandatory, and even they would like to go to the restrictive disclosures also. This is actually seen by and large. So these are all going to be a challenges when the report is being prepared for the first time.
Yeah, Charmi.
Coming to regulation 39, subregulation 2, which talks about issue of share certificate. It states that earlier the provision stated that the listed entity shall issue certificates or receipts or advice of a subdivision, split, consolidation or renewal, etc. in issuance of duplicates thereof or issuance of new certificates in cases of losses or old disreceipt or worn out certificates within a period of 30 days from the date of such lodgement. Whereas the new provision provides that the new certificates shall be issued only in a dematerialized form within a period of 30 days from the date of such lodgement. Coming to regulation 40, subregulation 1, a proviso relating to securities to be in demat mode before transmission or transposition. So earlier, the proviso stated that...
Just tell me 1 second, because can you just go, I have one slide question.
Yeah.
Because now even this issuance of all these certificates to be in demat form, but Sudhakar sir, I want your views that do we issue a physical certificate for our record and then demat, or how do we do about this basically for corporate?
No, you will not issue a physical certificate. You are giving, I think, a certificate that he is holding the shares. It is not a share certificate. There is a concept is there. I'm not getting that concept. That is kind of that you are certifying for the purpose of demat that this person is holding this many number of shares. Based on that, he will go and get it dematted. Then the shares will be credited. Letter of confirmation. Yeah, somebody has given that word. Letter of confirmation it is. So whenever a person is approaching for issue of duplicate certificates or for transfer of certificates, a letter of confirmation will be given by the company or the RTA, based on which the shares will get dematted, and then the dematted shares will be credited to his account.
Or shall the company directly credit in the demat account?
No, it will not happen directly because you have to go through the depository participant only.
Okay.
And the question is, can certificate be issued in demat mode? It should be securities.
When you are coming with any of issue of securities for the first time, that time definitely you will go through the demat mode only. But what we are talking about in this case is a transfer and transmission of shares in physical, when that holder is having a physical.
Yeah. Okay.
Coming to regulation 40, subregulation 1, which speaks about proviso securities to be in demat mode before transmission or transposition. It states that the proviso, except in case of transmission or transposition of securities, requests for effecting transfer of securities shall not be processed unless and until the securities are held in the dematerialized form with a depository. However, the remark being that provided the request of effecting transfer of securities shall not be processed unless the securities are held in depository dematerialized form with the depository, provided that the transmission or transposition of securities held in physical or demat form shall be effected only in dematerialized form. A timeline for processing transmission or transposition request has been provided here. So on receipt of proper documentation, the listed entity shall register the transfer of its securities in the name of transferee and issue certificates as applicable. And within a period of 15 days from the date of such receipt of request of such transfer, provided that where transmission requests are processed, it shall be done within 7 days after the receipt of specified documents. And the proper verifiable dated records of all correspondence with the investor shall be maintained with the listed entity. Coming to regulation 40, subregulation 9, which talks about a certificate from a practicing company secretary. It states that the listed entity shall ensure that the share transfer agent or the in-house share transfer facility, as the case may be, produces a certificate from a practicing company secretary within 30 days from the end of financial year. Earlier, the provision stated that it should be within 1 month of the end of each half of the financial year. So now, earlier it was like we have to issue certificate twice a year, which now we will be issuing only once a year. Coming to regulation 43A, applicability of dividend distribution policy. Earlier, the provision stated that it shall be applicable to top 500 listed entities, which shall formulate a dividend distribution policy, and it shall be disclosed in their annual reports and on their websites. Which now it has been amended and states that top 1,000 listed entities based on their market capitalization shall formulate a dividend distribution policy, and which shall be disclosed on the website of and a web link also should be provided in their annual reports of the listed entities. Coming to regulation 44, subregulation 3, which talks about voting results updation on the stock exchange. Earlier, the provision had stated that we shall submit the voting results within 48 hours of conclusion of its general meeting, which now states that the listed entity shall submit to stock exchange within 2 working days of conclusion of general meeting. So voting results shall now be uploaded on the stock exchange within 2 working days instead of 48 hours. And working days here means working days of the stock exchange where the securities of the entities are listed.
In fact, this is a great relaxation for the companies.
Right.
That is true.
Even to the practicing company secretaries who are the scrutinizers.
Yeah.
Yes, yes. Otherwise, Saturday, Sunday also.
Yeah,
Yes.
That is right. Now that problem is solved actually here.
Coming to regulation 45, subregulation 3, which talks about certificate from a practicing chartered accountant. It states that upon compliance for the conditions of change of name laid down in Companies Act and rules made thereunder, the listed entity in the explanatory statement to the notice seeking shareholders approval for a change in name shall include a certificate from a practicing chartered accountant stating that they have complied with the provisions.
Dipti, that why you are keeping quiet? This is a practicing chartered accountant. Why you are keeping quiet?
Absolutely, I was coming to that.
And your spouse is an ex-president, former president of Institute of Company Secretary. You should take up this thing immediately.
Yes,
Absolutely.
of course.
Absolutely.
I have brought this to the notice of ICSI already.
Even I.
Get it? Pursue it then.
Yeah. It should be.
Yeah, the presentation, just a second. Yeah, the requirement for
But even Sudhakar social audit, the standards and all has gone to ICAI drafting their committee.
Pardon?
For social audit,
Uh-huh.
standards drafting is gone to CA Institute,
Oh,
their committee, and the explanation is given. They already has a committee and all that working. So I already brought to the institute that it should be, our involvement should be there. It is subjective. It's not only figures.
right.
Yeah, sorry, Charmi. You can.
The presentation and the audio or video recording shall be promptly made available on the website, and in any case before the next trading day or within 24 hours from the conclusion of such calls, whichever is earlier. And the transcripts of such calls shall be made available within 5 working days of the conclusion of such calls on the website, provided that such information shall be posted on the website of the company for a minimum period of 5 years, and thereafter as per the archival policy of the listed entity. Then the requirement of such disclosure for audio and video recordings and transcripts shall be, it was earlier voluntarily with effect from 1st April 2021, which is now mandatory with effect from April 1, 2022. Also, a secretarial compliance report under Regulation 24A Subregulation 2 of this regulation has been mandated. Disclosure of the policy for determination of materiality of events or information which is required under Regulation 30 Subregulation 4 under Clause 2. Then disclosure of contact details of key managerial person who are authorized for purpose of determining the materiality. Then even disclosures which are required under Regulation 30 Subregulation 8 and statements of deviation and variations in Regulation 32. And dividend distribution policy by the listed entity based on the market capitalization shall be made on the website of the company. Then we will be now discussing the required compliance, and here I'll be talking about the quarterly compliances, half-yearly compliances, and the yearly compliances. So coming to quarterly compliances, the Regulation 27 Subregulation 2 Clause A speaks about corporate governance report, which shall be submitted within 21 days from the end of the quarter. Also, Regulation 31 talks about shareholding pattern, which shall be submitted within 21 days from the end of the quarter. And Regulation 33 Subregulation 3 Clause A, the financial results along with their limited review report or the auditor's report as the case may be, shall be submitted to the stock exchange within 45 days from the end of such quarter. Regulation 13 Subregulation 3, which talks about statement of grievance redressal mechanism, it shall be submitted within 21 days from the end of quarter. And a statement of deviation or variation under Regulation 32 Subregulation 1, it shall be in case of deviation or of proceeds of IPO from the prospectus shall be submitted within 30 days.
Nagar, I have one question here. When we are talking about the financial statement 45 days, corporate governance report in 21 days, these are all forming part of the financial report. The synchronization is not required here.
I couldn't get your question. What is that, sir?
No, here, Regulation 33 says financial results.
Yes, 45 days. Right.
Regulation 27, corporate report, corporate governance report, 21 days. Now, financial reports actually contain the corporate governance report and is actually sent along with the financial statements. Then what is the point of having 21 days here separately?
No, if you see the format of the corporate governance report, this one I'm talking about, which you have to file quarterly, it is more of compliances only, whether you are constituted the committee or not, all the committees.
Achha, we are not talking about the corporate governance report as such. We are talking about the compliance report on corporate governance.
That is quarterly report, not the annual, sir.
Okay, I have been carried over by only reading the corporate governance report, I think.
No, it is not so.
Okay. And one more thing, Sudhakar, I do not know, again, you will be recalling because you are the old timer, even Rajiv also there yesterday, I was talking to him also. Some other, I do not know, there is a disorganization between the Companies Act and the SEBI laws are once again cropping up, which we used to experience about 25-30 years back. Because companies are incorporated in the Companies Act, we are actually supposed to go by the regulation. We are working under the framework of the Companies Act. Now the SEBI brings something differently than the Companies Act. The organization doesn't take place in many areas. Because we have discussed the related party transaction, approval of the related party transaction only by the independent director, unanimous director in both the regulations. Then we are talking about the appointment of the auditors, additional director appointment within 3 months. You have to call the AGM. One side you are talking about the ease of doing business. Other side you are putting this out of the regulation. Then that means necessarily you are giving what you call the extra pressure to the business community to call the EGM within 3 months from the date of the appointment. All the things are all taking place. Don't you think The harmonization is again cropping up between the two regulators.
Sir, yesterday there was a web. Sorry, Rajiv, please go ahead. Sorry.
Just to supplement what Bala sir has said, I still remember 92, 93 when I started. We used to refer to the memorandum and articles of association for any of this thing. Now I think we have completely forgotten what is written in the articles of association. We are referring to LODR. We have even forgotten the Companies Act. I mean, sometimes when my team members come for taking signature on the articles because they wanted to submit to the government authorities, I said what this document is. I mean, I have completely forgotten what is written in my articles of association. I have never referred to maybe in last 5 years. What are the provisions on the director's appointment or anything for that matter?
In fact, yesterday there was a webinar of corporate professionals where I was one of the panelists there. There were about 6 to 7 questions. The essence of that is what you asked just now. Why in the ease of doing business, different regulators have different regulatory provisions. Say, for example, Reserve Bank of India says even a private company has to have independent directors if it is a systemically important NBFC company.
Right.
So, and the moment you have independent directors, you have the audit committees and all those things, you may have to comply with the provisions of Companies Act also, because one school of thought is once you have the committee, you have to comply with the provisions.
Even in NBFC companies, if they are incorporated as a private limited company, they need to have the audit committee. As per the RBI
similarly, that DPA guidelines are there for Department of Public Enterprises. They have a set of guidelines, insurance companies. So, in fact, this question, somewhere in the year 2016, when this 2015 listing regulations have come, one of the SEBI official was there. I asked him the same question that why can't you, in fact, if you see, to a large extent, listing regulations and provisions of companies have got aligned. Earlier, when these acts were new and the listing regulations were new, that disparity was too high. Over a period of time, at least they could brought down that disparity to a large extent. That point of time, I have been answered by the SEBI official that look, your companies are listed companies, and we are the regulator for the listed companies, and we want to handle them with a different hand altogether. They have to have the compliances on a different pedestal. And same is the case with the Companies Act also. Suppose if it is a private company, public company, small company, dormant company, different set of provisions are there. So ultimately what happens is at the end of the day, if your company is governed by different regulators, whatever the highest compliance is there, that you have to ensure it. Say for example, if your company is a joint venture company, and in fact, if we have a joint venture company where as per the JV agreement, we have to give 30 days notice for the board meeting. Short notice board meeting is possible only with 15 days notice. That means I cannot hold a meeting with less than 15 days notice. That is the hard provisions we have in the JV agreement because our JV partner says so. So we have to comply with that. So on one side, you have to say your list, your articles, you have to say your JV agreement. If it is a JV company, then you have to say your regulators compliances. Then of course, your mother Companies Act, definitely you have to get governed by that.
I remember Sudhakar 30 years back when you were talking about it. I think the company where I was working, it was actually closely held public company. Closely held unlisted public company.
And the second
in our article, we had a provision. No board meeting can be held without the presence of the director representing the parent company. This was the provision. When we went to the stock exchange for the listing to get the principal approval, the point raised by them very categorically. If this is the case, if he is unable to come, do you mean to say board meeting will not take place? Do you mean to say board meeting will be invalid? This clause has got to be removed completely. How can the parent company agree for removal of the clause? This was the dilemma that I am talking about 30 years back. And ultimately, after the lot of discussion, we said, okay, in such a case, to overcome this, we amended the article in such a way that for a particular board meeting, either the parent company or the concerned director, they can give the waiver. In the absence of him, the board meeting will be held in order to fulfill the requirement of the listing regulations. This is the article we amended first. After amending the article, we have submitted things to the stock exchange. Then only we got the principal approval. That is what it has happened. This is a whole story. Today again we are again coming back. You know what we call history repeats. organization problem. Because organization problem was there long back. In some or other, to the greater extent, the people, MCA people, and also the company secretary, this one Companies Act people, they sat together, SEBI, and they have largely, phased out everything. The organization has actually come to the greater level. Today again, it is dropping again. Because what I am talking about, you're right. Absolutely, you're right. Different level, everything is there. But at the end of the day, in the larger interest, ease of doing the business.
Yeah, correct. I agree with you. I fully agree with you. In fact, recently, one of my colleagues who is a company secretary with 5 years of experience, he was telling me on the lighter side, sir, aapke time bahut acha tha. There were not this kind of compliances and all these things. And your exams were also very easy. He was actually looking into the old company secretary exam papers and all. So he said, aapka to everything is a cake. I said, look, at every generation, you have your own challenges. I told him about MRTP. If you want, similarly, the kind of approvals. In fact, when I stepped into this profession in '84, that point of time in the interviews, we used to ask that the company secretary's competence is determined by the kind of liaison what he has with the Ministry of Corporate Affairs. Can you get the charge registered? Was one of the questions we used to ask. About the share transfers, that is the competency of the company secretary, what is determined by. Whereas now it is entirely changed. So every generation has their own challenges. You cannot say it is easy, it is difficult and all. Because the rules of the game are getting changed.
See, absolutely you're right, Sudhakar. I think when you are talking your time, it is tough for turn. I had a toughest time in getting through the cost accountancy examination way back somewhere in 1980s. Because one of the papers which was actually there, what you call this sort of the engineering and mathematics, where I had to learn what you call the differential and calculus, etc., and other things and all the same, which is very, very difficult. I could not get to the examination first. I had to take a specific tuition, and then only I had to get through. I failed the examination the first time when I gave that. That was the case. Every generation, there are challenges because timings are changing. It is very easy to say in your time it was easy. In our time, we had a different challenges. Yeah.
Para was there that time.
That is right.
It was also tough.
Para was there, MRTP was there. What do you call that? What do you call? One more act was there. All the things were all difficult those days.
Yeah. There is a question: if a private company has voluntarily appointed an independent director and has CSR committee, is it mandatory to appoint such independent director on CSR committee as well?
Technically, the answer is no. But what will happen is you will definitely get a query from the regulator. You have to go and convince him all these things. I don't need to have independent director, but I have voluntarily appointed. All these issues will come. Regulator may get convinced, may not get convinced. In case you are voluntarily appointing an independent director, better appoint him on the CSR committee so that you will not have this kind of issues.
Very practical answer.
Absolutely, you are right. If you are actually appointing voluntarily what is required by the law, please follow the rules, what is applicable to that category. That's it.
Let me tell, recently somebody asked me a question. Sir, my company need not constitute an audit committee, but voluntarily we want to do it. I said, are you going to comply with all 177 provisions? He said, no, sir, we are not going to comply. Then I said, you will be in trouble.
Yeah.
Because the moment you have the audit committee, the moment you are not complying with, the regulator will question you. He may take an interpretation that the moment you have an audit committee, you have to comply with 177. What the answer you will give him? You may give any answer. He may not get satisfied. What you will do? You have to go for compounding. So it is up to you.
In this case, can we appoint a committee and call it something like oversight committee? Not call it audit committee.
Sir. See, unless until you don't give the caption of the statutory committees. Till the time you can do anything.
So call it oversight committee and ask them sort of in their mandate to do all the things that audit committee is required to do.
Yes, by all means. By all means,
there is no problem. Yeah. But the moment you appoint a committee which is statutorily required, then you are in trouble.
Yeah, correct.
You say that regulatory audit committee, statutory audit, something like that, but don't call it as audit committee.
Domestic
Simplicity.
audit committee, domestic audit committee, something
Yes,
like
do it.
I
Right,
can
by all
say
means.
that it is like that we were told, no, that don't mention a person as a director if he is not member of the board. So if the moment you say audit committee or independent director, the public will presume that the company is following this
Correct.
and they will get that credential.
Correct.
So if you are going to follow, then name it that, otherwise you give it other name. I think we can take
Sir,
it.
because because what happens is that some people may mislead the stakeholders by giving this constitution the voluntary audit committee, voluntary NRC committee, and all these things, and they're not complying with anything.
correct.
So regulator may take a different view altogether. That's
Right.
why I always advise, at least in case you are voluntarily constituting a committee, better comply with the provisions. Otherwise, don't constitute it at all.
Otherwise, regulator will take it in that way that you are misleading stakeholders.
Correct. In fact, in our group, we have taken this call like this only, the way I am telling.
Okay. Okay, thank you. Okay, Charmi, you can go ahead.
Coming to half-yearly compliances, Regulation 23, Subregulation 9 talks about disclosure of related party transactions, and it should be done within 30 days from the end of publication of its standalone and consolidated financial results. Coming to annual compliances, Regulation 7, Subregulation 3 talks about share transfer agent that should be done within 30 days from the end of financial year. Regulation 23, Subregulation 9, which talks about disclosures of related party transaction, it should be done within 30 days from the end of publication of its standalone and financial results. Regulation 24A, Secretarial Compliance Report, it should be submitted within 60 days from the end of the financial year. And Regulation 33, Subregulation D clause, Subregulation 3, Clause D, financial results along with auditor's report, it shall be done within 60 days from the end of financial year. Also, Regulation 34, Subregulation 1, which speaks about annual report, it should be not later than the date of commencement of dispatch of notice to its shareholders. Regulation 40, Subregulation 10 talks about transfer or transmission or transposition of securities. It should be done within 30 days from the end of financial year. And initial disclosures requirements for large entities, it should be done within 30 days from the beginning of the financial year. And the annual disclosures with respect to large entities, it should be done within 45 days from the end of financial year. So yeah, if anybody has any questions, they may please ask.
I think we had questions during session only. If still anything is there, otherwise we are before that to close the session today.
Bala sir and Sudhakar, I have one question. And Bala sir, if we remember yesterday we discussed about this appointment of directors.
Yeah.
Like additional directors, earlier the provision is basically you have to regularize at the next AGM, but SEBI LODR says that within 3 months. So only one question which I want or a clarification, because I've seen some of the companies are doing it through postal ballot or through AGM. There was a slight confusion about that. So I just want a clarification on this from Bala sir and Sudhakar sir. And what's the exact provision I mean?
See, that as far as your company, if it is a listed company, then this Regulation 17(1)(c), which has come now, it says that if you appoint a new director, an appointment of a director is to be approved by the shareholders at the next shareholders meeting or 3 months, whichever is earlier. So because of that, what happened is under the Companies Act, when you appoint an additional director, though he can continue till the commencement of the next annual general meeting, that means virtually he can be a director for a period of 1 year without the approval of shareholders.
Correct.
But SEBI is not comfortable with that. They say that this person without the shareholders' approval is acting as a director for almost 1 year. So they say that no, it is not correct. So they brought down that thing to this next general meeting or 3 months, whichever is earlier. So you are now, what happened is all the listed companies, if you appoint an additional director, you have to get that approval within this timelines. So if you are not having an AGM any general meeting in the near future, you have to conduct a postal ballot and then get the approval of the shareholders. That's what the answer to your question.
Okay, sir. Thank you.
Yeah, that is right. That is the way the regulator has actually come out with SEBI now.
So you need not call an EGM for this, right? So you can do it through
Not
postal ballot.
necessarily. Do
Yeah, it can be done
it
through
is
the
up to
postal
you,
ballot.
whichever is convenient.
You can call the EGM also if you want, or otherwise you can do it through the postal ballot also. Choice is yours.
See, Rajiv, even if you convene an EGM, as a listed company, you have to go for e-voting.
Yeah, right.
With the postal ballot also, you have to go for e-voting. So better you go do the postal ballot only. Why to conduct EGM and incur unnecessary expenditure?
Correct.
Yeah.
Okay.
In fact, Dipti, with your permission, let me also say to the participants. In fact, that several times I go with different forums. Whenever we discuss these kind of issues, the amendments coming under the Companies Act. In fact, every legislature is getting amended. Not only it is the Companies Act, whether it is Income Tax Act, GST, okay, your Insolvency and Bankruptcy Code, all these things are going to be changed. So some company secretaries, youngsters especially, asked me that how to gear up for all these things. The simple mantra for that is that, in fact, people say that sometimes that time is not there. I told them only one question I want to share with the participants also, whether you, me, or Mr. Mukesh Ambani, we got 24 hours only. Similarly, even Narendra Modi also, why only Mr. Mukesh Ambani, even Narendra Modi also, we all have 24 hours time. When they can do much more than what we are doing it, this is the only way. We have to find extra time. Either you sit late in the night or get up early in the morning. Let me tell you honestly, right from the time this Companies Act has come into force from 2014, and I joined SSB, I made it a habit of getting up at 4 o'clock. Prior to that, I used to get up at 6:30. So 2.5 hours for the last almost 7 years, I'm getting extra every day. This is how I keep myself updated at this age. Now the clue is there to all the youngsters who are participants here.
At this young age.
Yes, exactly. Fully agree, sir. Fully agree. There is no other
Sudhakar, I would just like to extend what you said. You know, I think you might have read, maybe Bala has read this book, The Final Diagnosis by Arthur Haley. It used to be popular in my times. His last chapter is wonderful on what you have written, what you said just now. He says, as you grow older and older and more senior in an organization, you get involved in this committee, that committee, administrative matters, until you are divorced from your real core professional work. So he says, then you become irrelevant. So every week, spare one day to get yourself out of these things, lock yourself in a closet and become up to date. It's worthwhile reading this book. It's a wonderful book. The Final Diagnosis.
What is the book name? Is that?
The Final Diagnosis. Arthur Haley. Superb book.
Okay.
It is about a senior physician and a young smart physician diagnosing cancer in a person. Superb book.
I'll put that way, every professional is professional. We are also professional. So if singer don't riyaz for days and months, what will happen? If musician do not riyaz, if athlete don't run, and if the player does not practice, what will happen? Same thing to us.
Absolutely.
If doctor doesn't know what is the recent update, what is the disaster it will create? Same thing with us. We are in the pre-diagnosis stage. So we should know all the recent thing, what is going on. Otherwise, we will be fail in treating the situation. And we will create more complication in the situation because of lack of our knowledge.
Sudhakar, do buy this book.
Yeah, I'm sorry. Already I have seen on the Amazon, it is available there. I'm going to buy that.
There is a question, is there any changes in timeline for submitting disclosure under 23(9)?
Related party transaction.
Yeah, I think there is the amendment has come, that whatever it was there, that submission of that thing is there, it is going to get changed.
Okay.
In fact, I don't remember exactly, but it is some changes are coming. Even the format also is changed. And similarly, at a consolidated level, you have to do it earlier, whereas now you have to do it at a standalone level only.
Okay, now regulation 17C applicable to SME listed company, is regulation is applicable?
It is every director, whether it is an independent director or not, it is immaterial. 17C is applicable to every director, whether it is a nominee director or independent director, woman director, resident director, whichever the director it is.
Director. Yeah.
17C is applicable to a director simpliciter.
Regulation 17C is a director includes independent director for approval of shareholders for regularization.
Yeah, this is what I have mentioned to you just now.
Okay. Please, okay, fine. That's all the questions are over. I think we have any questions or we will close the session. If anyone, just unmute yourself and okay, I asked this question because PPT says it's 30 days. Okay, just say that Ria, that there was a mistake. I apologize. I think we should correct it. It is 30 days only. Okay. Okay, any other question? Regulation 17 to 27 are not applicable.
In fact, you see, always you can put a disclaimer, Dipti, that I used to do that. Of course, I have not done it here. The views expressed are my personal views. Nothing belongs to the organization. And similarly, errors and omissions are always ignored.
Yeah. Regulation 17 to 27 are not applicable to SME listed company, and will it be applicable from financial year 2022?
See, these are all micro questions. One need to check that thing. It is better because I am also not online as far as this is concerned.
Yeah. If suddenly it comes, we have to read it very carefully and
see, as I was mentioning, again, let me repeat it that this type of webinars and conferences, mostly we have to discuss about the interpretational issues, if any. So the panelists who are experienced in the particular line can come and clarify that. So now some questions, if you refer to the listing regulations, you will find the answer there. The procedural aspects and all, you will find the answer there. If you ask me, guys, that who has to constitute the audit committee, I can say the threshold limits, you have to check it. I don't remember what is the turnover figure and all these things. You cannot expect a person also to remember, So interpretational issues, yes, one has to do that thing, no doubt about it.
Sudhakar sir, just one question. Because in many or almost in all the provisions, we are mentioning the financial year April to March, but some companies like ours follow Jan to December, basically to align with our parent company. Now, what is the correct interpretation of that, basically? I mean, because
if you are to that extent, I will go and say that, okay, but you have to go as per your financial year, because you are having your financial year from January to December, as you have been permitted to have that financial year. So you will go as per your financial year.
Yeah, that is right. You will go with your financial year, January to December.
Absolutely.
Because there are many companies who are actually collaboration with the overseas companies.
Because very few companies are there with calendar year as the financial year.
Yeah,
that's why
right.
to a large extent it is a March-April concept only. But as far as if you are having a financial year as calendar year, you will by all means you have to go as per that.
yeah.
Hello, sorry, good afternoon, Dipti madam. I am Jivan here.
Yeah, Jivan, please.
Yeah, good afternoon, all the panel members. First of all, my due credit to Mehta and my team, Mehta and Mehta, for organizing these wonderful seminars. Now, my question is relating to related party transactions amendment, which came into which was SEBI has amended in November 21. Now, I have seen that many companies are going for a postal ballot for getting the shareholders approval for material related party transaction. Now, I think last week there was a clarification from SEBI that this related party, pre-approved related party, can continue till the AGM also, which the companies will be conducting for the financial year 31st March 2022. So is there a confusion? So does this mean that all the companies which are already sought approval through postal ballot till yesterday or till last week, has then that gone waste, or I just want to get some interpretation on this?
Yeah, Sudhakar, we discussed before session started, so you have to talk this.
Absolutely. See
that
yesterday,
about that,
not last week, it was only yesterday night that circular has come, which is talking about the omnibus approval of the shareholders. Correct. So before beginning of this webinar, we discussed about that. Where is the question of omnibus approval of the shareholders? There is a great confusion because of that circular, I cannot answer any question as far as this particular circular is concerned because I'm myself in a confused state.
We all are confused only.
Okay, okay. So you are, I thought so. I'm also with you then. Okay, okay.
Maybe some, I think, jokes apart, according to me, some kind of a clarification should come by next week as far as this particular circular is concerned.
Right.
Yeah.
Okay. Thank you. Thank you. Thank
Okay,
you very
thank
much.
you very much, Dipti, Bala sir, Raja sir, and all the
Thank
participants.
you. Thank you.
Thank you so much. Thanks everybody. Thanks for
Thanks, everyone. Thank you.
Sudhakar,
Mr.
please see
Rajiv.
my
Rajiv.
direct message to you. I have sent a direct message to you. Please see that.
Thank you, sir.
Thanks a lot.
Thanks, Mr. Rajiv. Thanks, Sudhakar. Thanks, Mr.
Thanks,
Bala.
ma'am. Thanks, everybody.
Thanks a lot, Sudhakar, for
Thanks,
your
thanks,
excellent
everybody.
participation. Thanks for Rajiv for your practical views. It was
Thank you so much, sir.
nice to meeting you.
Thank you, sir. Anytime I am of some kind of a useful to Mehta webinars like this, do invite me. I am always available. Thank you.
Now I can do.
Thanks.
Okay.
Thanks a lot. Thanks a lot. Thank you. Thank you very much.
Thanks.
Bye-bye.
Bye, everyone. Everyone, bye.
Bye, Sudhakar. Bye.